let's talk a little bit about DoorDash. This is a huge deal for you. You've been on the board. SoftBank made a big bet on DoorDash in the early days. And look at it now, a $60 billion company. What's your reaction to the debut and that big number, given that they raised at only $16 billion only 6 months ago?
It's a great day for DoorDash and all the constituents, the Dashers, the small businesses who are restaurants who are struggling in the face of COVID to keep their businesses open. And it's good for consumers. It's also good for the investors and the employees. So overall, a really good day. Obviously, strong market receptivity into a tough tape with a lot of news coming out across the world. So overall, really good day and a really important testament to the power of the SoftBank platform and Mas's vision about investing in next generation technology companies led by fantastic CEOs like Tony.
Talk to us about how Tony stands out from other entrepreneurs that you've invested in. He talked about delivering hummus from his Honda. It is hard to believe he founded the company only 7 years ago. But there were some tense days for DoorDash when they didn't know if they would be able to make the business model work. It is very costly, and there are a lot of logistics involved that are difficult to manage. And then the pandemic came along, and suddenly growth exploded.
Well, you know Tony, you've met him, you've had him on air. He's just an incredible human being, high integrity, enormous vision, but also he wraps that with the ability to attract great people who are going to execute against that vision. And the results that he's achieved over the last 7 years has just been phenomenal. And so it's such a pleasure to be part of that story and to be able to be on the board with Tony and to see where his vision's going. And as investors, we look for enormous TAMs, amazing business models, but we all talk about great management teams, and he's built a fantastic one.
That said, this valuation, $60 billion. There are folks who say we're at peak DoorDash right now because we're peak pandemic. When a vaccine comes along and life goes back to whatever new normal is, yes, maybe more people will order food online than they did before. How much does growth slow?
Well, people said that about Facebook, about Microsoft, about Apple, about eBay, about Twitter, about amazing technology companies. And as Tony has said and described in the S1, it's not just about food. Tony is building and his team the next generation last mile logistics company. And if you think about all of the goods and services that are sold, how more and more of that's going to be moving online and how people want convenience and things quickly. You have Amazon today on one hand, and every other business needs a logistics partner. And Tony's building a platform that is addressing a much, much larger TAM than just simply the food industry.
Do you have any concerns about the $30 billion that was left on the table? I mean, you've taken companies public before, Jeff. Do you think that this was underpriced?
Well, it's a difficult, as you know, it's both art and science. And what the market said today is we think very highly of the company. And stocks will move up and down, but it's an important day for the company, but it's just a day in the history. We, as long-term investors, think about the next 5, 7, 10, 15 years. And so I think there's a lot of growth ahead for the company.
Airbnb is coming up tomorrow. In general, when you look at the macroeconomic environment, tech has continually seemed to be divorced from what real world Americans are going through. I mean, the stock market keeps going up, tech companies and valuations keep going up when you have people out there that are really struggling. Do you think we're in a frothy market? I mean, you have a lot of entrepreneurs in your portfolio. I know that you're a very active mentor and coach to them. Are you telling them to prepare for a bubble to burst or for the good times to keep on rolling?
Yeah, it's a great question. On one hand, we have COVID, a global pandemic, and it's affecting people's health and their livelihoods. And so we have to recognize that. On the other hand, you have a tremendous amount of capital around the world that still needs to be put to work. And you can't invest in bonds in the low interest rate environment we are. So people are investing in equities. And within the equity markets, they're looking at where growth and fundamental change is happening. That's happening in both biotech and in technology. And so as a technology venture capital fund, we're benefiting from that tailwind. And so what I talk to my CEOs about is building sustainable business models making sure that your unit economic costs work, that your CAC to LTV ratios are working, and that you're building a sustainable business, because the economy will go through ups and downs. And if you are profitable, then you're going to be able to withstand those ups and downs, just like I did as a CEO through the financial crisis. So it's really about build a business to last versus just a business to go public.
Now, you've had a good year. You've also had Open Doors listing. Now you have DoorDash. Which of your companies is most likely to exit next? What's to come?
Well, there's a lot of companies in our portfolio across the 110 different companies we have in Vision Fund 1 and Vision Fund 2. Many of them are making great strides in product, in go-to-market, in sales, and profitability, and in market share. And so over the course of the next 12 to 24 months, we anticipate between 6 and 18 more companies in our portfolio will be able to tap the public markets. So we're just at the beginning. The Vision Fund is 4 years old. And as you know, it takes a few years for companies to kind of scale and to see public exits inside of a venture portfolio. And we're just at the beginning. I think the brightest days are ahead for the Vision Fund.
Well, and on that note, SoftBank did make some really big bets that didn't pay off. WeWork comes to mind. You have made some governance changes, but the reputation of the Vision Fund did take a hit. How do you respond to that?
Well, as you know, venture capital is a portfolio game. You're going to have a couple really, really large winners that are going to return the fund. And you're going to have some bets that give you a modest return and some that you're going to lose money on. That's the industry and that's the game. And if you look at the investments we made on a global basis, we're in the top companies within their respective industries with the most amazing set of entrepreneurs. And we've had over 200 different venture capital funds vest alongside of us in those different portfolio companies. So there's nothing unique about that. It's about portfolio construct. And overall, the fund is doing incredibly well, as demonstrating the last earnings report for SoftBank. And we're excited about what the future holds for us.
What's going on with the Vision Fund's SPAC? SPACs are all the rage now, as you know, with Open Door. Will you be involved in that?
Well, we're still in registration, so I won't comment about our SPAC particularly. But what I will say is that the Vision Fund has the ability to invest across the capital structure. So we could do public, we could do private, minority, majority. That gives us flexibility as we see opportunity around the globe to be able to put our capital to work in pursuit of great returns for our LPs. And SPACs in general are another tool that help companies get liquidity and tap the capital markets so that they continue to invest in R&D and innovation. So we're excited about having another, if you will, arrow in our quiver.
Now, DoorDash is one story benefiting from pandemic trends. It's not the same for other companies out there. You've got a construction company, Katerra, which has a number of cool projects ahead, including building a gigantic city planned in Saudi Arabia. Can that company recover, and how much runway do they have?
Well, as you know, there are certain industries, travel, retail, movie theaters, that are struggling in COVID, and construction in some parts of the world. And then there are companies benefiting from the tailwinds, food delivery, ed tech, ag tech, stay at home, fitness and wellness, to name a few, video games. And so that we're in a particular part of the cycle, but we feel really good about the companies we have. They're well capitalized. They have enough cash to withstand the global pandemic. And we have a deep capital structure where we can support our portfolio companies, which is fairly unique in the venture community. So I'm still very optimistic about Katerra, as well as a number of the other companies in our portfolio that are going through a tough time today.
So what are the trends that you're going to be doubling down on going into 2021, knowing that a lot of things will be different, but there will be some restoration of normal? We just don't know how normal it will be.
Yeah, it's kind of more of the same. Find great entrepreneurs with innovative ideas, tackling very, very large industries that we believe they can build companies to last, regardless of what the current macroeconomic condition is. And so, as I said, we're making a number of investments in transportation and logistics around the world, Biotech, we've been very active in. Enterprise software continues to do well. Consumer continues to do well. And real estate, as you said, I have Compass and Open Door in the portfolio. Residential real estate is doing really, really well as people are moving out of dense urban centers and buying bigger homes in the suburbs and in remote areas. So we think overall those trends are going to continue through 21 and 22, and we're going to continue to lean into them.